They hand it to you like a shiny golden ticket. A piece of plastic with your name on it, a crazy high spending limit, and a little voice saying, "Go ahead, treat yourself." But what they don't tell you is, that card might just be the reason you stay broke for life. Welcome to the credit card trap, where the banks play chess and you're just a pawn. Let's get real. The moment you swipe that card, the bank isn't thinking, "Aw, look at them, they deserve something nice." Nope. They're thinking, "Cha-ching, another one locked in." And why wouldn't they? According to data from the Federal Reserve, Americans owe over $1.3 trillion in credit card debt. That's trillion with a T. And guess what? That number keeps climbing every year, like a rocket with no brakes. But here's the kicker. Most people have no idea how deep the rabbit hole goes. You think you're just borrowing $200 for dinner and a weekend getaway? But when that interest kicks in, you're not paying $200 back, you're paying $350, maybe more. That's because the average APR, annual percentage rate for credit cards, is now hovering around 20% or more. Some cards even push 30% depending on your credit score. That means for every $1,000 you don't pay off, you're giving away hundreds of dollars just in interest. Let me hit you with a quick fact bomb. If you owe $5,000 on a credit card with a 20% APR and only make the minimum monthly payment, it could take you 25 years to pay it off. 25 years. That's not a payment plan, that's a life sentence, and the banks, oh, they're loving it. Because every month you don't pay in full, they're just collecting more and more cash off your struggle. Now let's expose the dirty little tricks they use. Ever wonder why banks send you pre-approved offers left and right? Congratulations, you've been selected. Yeah, right, they're not doing you a favor. They're targeting you because they know once you're in, it's game over. They count on you to overspend, miss a payment, or just pay the minimum so they can rake in that sweet, sweet compound interest. And speaking of tricks, have you heard about universal default clauses? These used to be legal. If you missed a payment on one card, banks could legally hike the interest rates on your other cards, even if you were paying them on time. It was so outrageous that it had to be banned under the Credit Card Act of 2009. That law saved people from falling off a financial cliff. But trust me, the banks still find sneaky ways to get you. Here's something that'll blow your mind. Credit card companies design their billing cycles to trip you up. Most due dates are carefully chosen, right before your payday or in the middle of your monthly financial chaos. So you're more likely to forget, be late, or pay less than you planned. And then, bam. You get hit with late fees, penalty APRs, and credit score damage, all while the bank sits back and watches you struggle. Now let's talk psychology. Because yes, these companies have studied your brain more than your own therapist. Studies in behavioral economics show that people are willing to spend more using plastic than cash. Why? Because credit cards detach emotion from spending. You don't feel the money leaving your hand. It's painless until the bill hits and you're staring at it like, who spent $600 at Taco Bell? But wait, it gets worse. Ever noticed those minimum payment suggestions on your statement? They look helpful, right? Wrong. Those are strategically designed to keep you in debt longer. Research from the University of Warwick shows that listing a small minimum payment makes people less likely to pay off more, even when they can afford to. Translation: they want you trapped. The longer you owe, the more they earn. Simple, and don't get fooled by rewards programs. Earn miles, cashback points for every dollar. Sounds amazing, right? Except you're giving away way more in interest than you'll ever get back in points. It's like trading a $20 bill for a $1 coupon and thinking you won. And yes, a few people game the system. But 90% of users either don't redeem their rewards or lose them to expiration and blackout dates. So WHO really wins? The banks. This isn't just about bad habits or poor choices. It's about a rigged system, engineered by professionals who spend millions studying how to keep you poor while making you feel rich. They want you in a cycle. Spend, pay a little, owe more, repeat. And all the while, your future wealth is slipping away. Month by month, swipe by swipe. And here's the scary part. We haven't even scratched the surface. In the next chunk, we're diving even deeper into the rabbit hole. Credit score manipulation, lender algorithms, and how this system was designed to favor the rich and trap the rest. Buckle up because it's about to get even more eye-opening and a whole lot more infuriating. So you thought credit cards were just about swiping and paying back later? That's just the surface-level illusion. The real game is happening behind the scenes. in a dark little place called the credit score system, where your financial worth is reduced to a 3-digit number, and banks use it like a puppet string to control your entire financial future. Here's the truth they never told you. Your credit score isn't built to help you, it's built to protect them. Let's break it down. The most common system, FICO, is based on an algorithm that no one outside the company fully understands. Not even the banks. Yep, the algorithm that determines whether you get approved for a mortgage, a car, or a credit card is basically a black box mystery, and yet it controls everything. But what's even crazier? The score favors people who are consistently in debt. That's right. If you pay off your card in full every month and never carry a balance, you actually don't score as high as someone who constantly uses credit and pays just enough to keep the account active. Why? Because lenders don't make money from people who pay off balances. They make their billions off interest. So the system rewards borrowers who look responsible but still feed the machine. Wild, right? And don't even get me started on the credit utilization trick. Most people don't know this. If you have a $10,000 credit limit and you're using $4,000 of it, your utilization rate is 40%. And that's bad in the eyes of the algorithm. Anything over 30% starts dragging your score down. But here's the catch. Most people aren't taught this. They think, well, I'm under my limit, I'm good. Nope. You're getting silently punished every billing cycle. And your score drops while you're thinking you're being responsible. Oh, and let's talk about credit history age, because this part's almost laughable. If you close your oldest credit card thinking, I don't need this anymore, guess what? You just nuked your score. Why? Because part of your credit score is based on the average age of your accounts. That old card you've had for 10 years, that was gold. And closing it shortens your credit history, making you look riskier to lenders, even if you've never missed a payment. This system is literally designed to trap you into lifelong relationships with lenders, even when you don't need them anymore. Imagine being in a toxic relationship, and every time you try to walk away, it wrecks your reputation. That's what the credit system is, a toxic financial marriage. Now brace yourself, because here comes the worst part. Your score can drop even if you've done nothing wrong. Banks can randomly lower your credit limit if they think you're at risk, based on spending patterns, economic shifts, or just pure algorithmic paranoia. And guess what happens when they lower your limit? Your utilization rate skyrockets, and your score drops even though you didn't do a single thing. It's like playing a game where the rules change every 5 minutes and the referee is blindfolded. Oh, and don't be fooled by the free credit score checks from your bank or credit card app. Most of those use a VantageScore, not your real FICO. So you think you have a 740, but when you go apply for a loan? Surprise! The lender says it's a 680. That difference can mean higher interest rates, worse terms, or a flat-out rejection. So let's get this straight. The entire system is vague, inconsistent, and tilted against the people who follow the rules. And while you are worried about missing one payment, the banks are busy selling your data, manipulating the score, and profiting off your confusion. And here's the crazy part. This isn't just about your ability to borrow money. Credit scores affect your job applications, rental approvals, insurance rates. Even dating apps now look at it. Your financial profile is literally becoming your social passport. And one slip-up can follow you for years. You're not imagining it. The system is rigged. And now you know why credit cards aren't just plastic, they're a leash. And guess who's holding the other end? Now, we're going even deeper. We'll talk about how this trap was engineered from the start, how the elites avoid it completely, and the shocking ways you can flip the game in your favor. Get ready, because what you're about to hear will change the way you see money forever. All right, now let's get into the part they really don't want you to know. Because this whole thing, it wasn't an accident. The credit card trap was engineered from the start, and it was genius for them, not for you. Let's rewind the clock to the late 1950s, when banks first rolled out credit cards. Back then, it was marketed as a luxury, something only the elite had access to. But once they saw how profitable it was to charge interest on revolving credit, they realized, wait, we can turn everyone into a paying customer, forever. So they made it mainstream. They made it normal, and today, the average American has 4 credit cards and carries over $6,000 in credit card debt. That's not a bug in the system. That's the system working as intended. Ever wondered why banks are always throwing pre-approved cards at you like confetti? Because they know the math. Statistically, A huge percentage of users will eventually miss a payment, pay interest, or get stuck in the minimum payment cycle of doom. That's when you pay just the minimum each month thinking you're keeping up, but you're really paying off interest, not the principal. And with rates hitting 25% or higher, that $1,000 purchase could cost you thousands over time. Welcome to the hamster wheel. But billionaires, they're not playing this game. Nope. They use debt as a weapon, not a weakness. Ever heard of good debt? That's the kind that generates income. They take loans at low interest rates, invest in assets like real estate or businesses, and then write off the interest as a tax deduction. Meanwhile, the average person is using credit to buy a new phone or groceries and paying 20% interest for years. It's a two-tier system, one for the rich, one for the rest. And speaking of taxes, get this. Interest you pay on credit card debt? Not tax deductible. But if you're a business, boom, interest becomes a write-off. So if a billionaire racks up $1 million in credit debt for business expenses, they get rewarded. But if you rack up $10K just trying to survive, you get punished. That's not just unfair, it's insane. And let's talk about rewards. You know all those airline miles, cashback offers, and hotel points? They're not free. You're paying for them in higher prices, fees, and interest. In fact, most of those rewards are designed to keep you spending. The data shows people spend up to 30% more when using cards instead of cash. Why? Because swiping feels painless. It disconnects you from the reality of your money. That's not an accident, that's psychology. Even the billing cycle is rigged. They give you a grace period, sure. But if you miss it by one day, interest is backdated to the entire cycle. And the interest is compound interest. So you're paying interest on interest on interest. It's like a financial black hole. You step too close once and you get sucked in. And here's the final kicker. If you want to get out of the trap, they make that hard too. You try to close a card, your score drops, you ask for a lower interest rate, they say no unless you're threatening to cancel. You want to consolidate debt? Sure, but it comes with balance transfer fees, new terms, and often even higher rates after the promo ends. It's like trying to leave a casino and every exit is a maze. But here's the twist, some people are starting to fight back. There are ways to break the system and use their own tricks against them. And in Chunk 4, we're diving into how you can turn the tables, escape the trap, and maybe, just maybe, start playing the money game like the billionaires do. You're not stuck, you're just uninformed, but that's about to change, forever.